just hit that record button. Let's see, there's one or two chats there. I think the replacement test was harder than this one. Typically, our replacement tests are harder because we want to discourage you guys from taking replacement tests. You must come and write the test when you're supposed to come and write the test. Okay? But I do understand that, obviously life happens. So some of you are writing replacement tests because maybe you really did fall sick. Maybe something happened at home. The list is endless. So I'm not trying to belittle that in any way, shape, or form. But yes, your replacement test, guys, avoid it by all means, because replacement test, replacement exam, we are definitely giving you a harder paper 9 times out of 10. Okay, so just be aware of that with any subject. We are typically, because you've had a longer period to prepare for it, of course, as I said earlier, life might have been going on, so it's not like you were just trying to avoid writing for, at least let me say, I'd like to say some of you. I don't know if that's most, I don't know if that's the minority, but yeah, so try to avoid that, and that's with any institution, to be quite frank with you. They do give you a little bit of a harsher assessment when you're talking about the replacement. Okay, but anyway, I don't believe there are any other questions that I have not yet addressed that we should just repeat for the benefit of those who are watching this online. Yes, okay, maybe just for the sake of, if there's anybody else out there online who wrote the replacement test, yes, we're revising the test that most of you guys wrote. So this is not the replacement test. Cool. So let's get into it. Question 2, they wanted you to do the journals. Okay, and that was for 30 marks, and they wanted you to do the debtors journal, debtors allowance journal, the cash book receipts or cash receipts journal, and then finally the general journal. Okay, they told you in the general journal they wanted narrations. All right, they said narrations are required, and then in the cash receipts journal they said takes place on a daily basis. Banking takes place on a daily basis. So in other words, every time you get money, you must also deposit that money. Okay. Then they went on to actually also tell you that it was on a perpetual inventory system. They told you that you are a VAT vendor. All amounts are inclusive of VAT unless VAT is not applicable. You're doing this for the month of March, and then they also gave you the codes for the source documents. Another critical thing is they said the markup is 30% on selling price. So let's quickly do our model. We're saying cost plus profit is equals to selling price, SP. So they said on selling price. So selling price is then 100%. At this point, guys, if you don't know this, I'm worried. Okay. But by now, I do confidently believe all my students are comfortable with markup and gross profit and, calculating these things. If not, there's still ample time between now and the 7th. You need to put in a shift to handle your business. Okay. Right, and then here that means cost is then, we're saying profit is 30% because markup is 30%. So this is obviously then 70. Okay. Someone post something in the chat. Let me quickly check. Okay, no. Sir is hearing things clearly. Okay, so we built our model. We can now jump into these transactions. So the first transaction they gave us there, they said additional capital contribution, 150,000. Okay, so I'm just going to do this because obviously you guys don't have the paper in front of you. So I'm just going to say, okay, that happened on the 1st. So Capital contribution, that's us receiving money, so that's going to affect the CRJ. Okay, so that transaction should have been recorded in the cash receipts journal. Then the next one on the 3rd, credit sale of trading inventory. Okay, credit sale of trading inventory. This is going to affect the debtors journal. Okay. Then the next one, we have trading inventory returned. Okay. This is going to, that means we sold, so this was on the 15th. Okay. This is going to affect the debtors allowance journal or debtors adjustment journal. And the next one was on the 21st. And the transaction there, it says took trading inventory for personal use with selling price including VAT 8,000. Okay, cool. So this is going to affect the general journal. Okay, because we can't record this in any of the journals. Okay, and there they said the trading inventory was worth 8,000. Okay, but again, remember this is the selling price. Okay, including VAT. Right. Okay, we'll deal with that just now. And then last transaction they gave you happened on the 23rd, and that was received rental income. Okay, cash receipts journal again. Okay, so those are your transactions. Those are your transactions. Okay. Again, if you guys have any questions or thoughts as we go along, please feel free to ask. Okay, rather explain everything and fail to finish than finish and nobody understand. Okay. So first journal they gave us was the debtors journal. So we can just begin there. Okay, the two transactions we have for the debtors journal, in fact, the one transaction because it was on the 3rd. It's only one. So here, do we have a doc number? Yes, we do. It's DIN. Okay, and this information is in the question. So this was a copy and paste. Okay, and that happened on the 3rd. And then under details, who did we do this with? The person we transacted with here was R dot. Okay, so this you shouldn't have had any problems with. Okay, under folio, nothing there that we need to do. Okay, we then, the amount that this transaction, how much did we sell for? We sold for 120,000. Okay, remember they said assume all amounts are inclusive of that unless told otherwise. So we plug in that 120,000 as is. Okay, under the debtors control column. Remember the debtors control column is the VAT inclusive amount. Okay, then we say to ourselves, okay, we need to calculate the VAT. Okay, so to be honest with you, at this juncture, I'm sure you guys are comfortable with this. I'm just doing this. It's the last time I see you. Let me be nice. Okay, right. So 15 divided by 115, and then times 120. Okay, so that's what we get. Did they say round off to the nearest rand? Nope, I don't see that anywhere. Okay, cool. So plug that into the VAT there. Happiness, the difference between the two will give you your VAT. Yeah, the difference between the two will give you your sorry guys, I made a mistake. I mixed up transactions here. On the 1st, the transaction was actually 150,000. That should be a 5. That should be a 5. So this is obviously also going to change. We'll just quickly calculate it on my side. Am I losing my marbles here? Sorry guys. I'm not wrong. It is 120,000. So that is correct. Then the difference between the two, you're gonna have about 100 and how much now? 104. 347.83. And then cost of sales. How are we going to calculate cost of sales? Remember, they gave us the markup there up top. So we then want to use this sales amount. Let's do that to get our cost of sales. Copy, paste, and then we are saying what we want is cost. Cost is 70. What we have though is selling price, which is 100%. So here you can just say times 70 over 100. And what should you get there? Okay, we can just clear this. So 104,347.83 and then times 0.7. Okay, is what you should get. And that's your cost of sales. Okay. So people actually did well on this, and I think we spent a lot of time on the journal. So bravo to you guys. I was quite pleased. Okay. Then the debtors allowance journal. How many transactions? We only had one transaction there. Okay, and it was the same guy returning goods to us. Okay. Let's open this a bit. And when did he return these goods? He returned these goods on the 15th. Okay, the doc number was BCRN, duplicate credit note 303. And the amount of these goods was 20,000. Again, under the debtors control column, we're using the VAT inclusive amount. Then here again, we're going to say 15 divided by 115 times 20,000. I could actually just do this. Okay, that would be your calculation over there. Okay, and then what do you get when you times that? Let's quickly see. Times 15, let's do that. And then divided by 105. Okay, so that's what you get. So that should be 70. So that amount, 0. Okay, here you could have sales, it could be sales returns, same thing. Okay, don't worry about it. You should, either way, you should be able to know. Okay, that's the difference between the two. And there, obviously, the difference between the two, you should get 17,391.30. Okay, then cost of sales, again, we're doing the same thing. Take that amount there. And then we're saying times, same principle here. What we want is cost, which we know is 70%. What we have, though, is the selling price. Okay, and if you calculate that, what do you get? Let's see. Let's just do this, minus 20,000. Okay, and then times 0.7. Okay, so that's what you should get there. Okay, again, guys, in the journals, I don't want to see negatives, eh? Don't want to see positives, don't want to see negatives. Okay, remember, we don't do that here in accounting. Okay, plus minus is only for in the accounting equation. Outside of that, we don't want to see plus minus. All right. So that was the one transaction in the debtors allowance journal. Okay. Then the next journal that they gave you was the cash receipts. Okay. First transaction that we had there for the cash receipts was the capital contribution on the first. Okay, so here the doc was DR 3333301. That happened on the first, and that was with the owner, okay, which was D dot. Okay. And then here they actually included this in the analysis of receipts, and it makes sense for them because here, can you see, they didn't tell us that a check was written out. So they said if you also look under the source there, it's DR. All right, and they did actually say DR in the when they gave you a breakdown of what the source document codes meant. DR was duplicate receipt. So that 150,000 actually went through the till, which was strange for me. But according to all the information they gave you, that is correct. But typically, capital contributions would just go straight into the bank via a check. But since there's a duplicate receipt, it means that this actually went into your till. Yeah, very strange that a guy would be running around with 150,000. But oh well, that is how you were supposed to record capital. Okay. Since we don't have a capital column, we then also need to record it in Sandry. That's all you need to do there. And then we move on to the next transaction, where what was happening? Rent income, the DCS 1. Okay, and the date was the 23rd. And who did we transact with? S dot. Okay. Okay. And they received rent income. Here was DCS. Can you see that? And that stood for duplicate cash slips. Okay. So if we got a cash slip, that means that the money actually went through the till again. Duplicate cash slip. Okay. So yeah. Okay. Remember they said every day that we receive money, banking takes place on a daily basis. So in other words, we deposited money into the bank whenever we receive cash. Okay. Here again, remember rental income. Rental income. There's no VAT on rental income, but it seems there. Okay, right. So here under sundry, you should have 15K, and then here you should have rent income. Okay, that's how it should be. Okay. Right, that's what should have happened over there. So that's your cash receipts, and then the last one that you have then is now the general journal. The general journal. Okay, for your question 2. And there we had only one transaction to record, and that was where the owner took trading inventory. Remember here on the, what date was it? On the 21st. Okay, they gave us the selling price. So which accounts are going to be affected? Okay, we know drawings is going to be affected. Okay, we're going to debit drawings because we treat drawings like drawings is a proprietary account, and we debit it whenever it occurs. Okay, much like expenses when they occur, but it's a proprietary account. Then we know trading inventory is going down, so we're going to credit trading. Take off this caps. Trading inventory. Okay. Again, guys, in your test or exam, no shorthand. Okay, only teachers are allowed to do that. And then remember, when I heard something there in the chat. I'll turn to it now. I just want to record this before I move on. Remember, when we first bought this trading inventory, we claimed input VAT. So to reverse the input VAT, we have to have output VAT. Okay. All right. Let me now address whatever in the chat. Do we get marks for writing the doc number and date? So let me. You do. You do get marks. There's very few marks there. Sometimes they can give you 1 mark for getting all your date and all your doc numbers correct. So 1 mark for doc numbers and then 1 mark for your date. Okay. In the journals, typically. In the individual debtors and individual creditors, we could give you more marks for the date. So maybe it might be 2 marks for the date, 2 marks for the actually for the doc number, because doc number is 1 mark for each transaction on the doc number. So they might give you 2 marks for the code if they ask you to do codes in that specific question. Then if you go to the general ledger, there also there's very few marks on doc on what's this, on the date. But the folio in the general ledger and the folio in your individual debtors and individual creditors, there's a lot of marks there. There could be half mark for each, there could be 1 mark for each. So there you want to make sure that you do your folio correctly. Okay, so that's that. TK. So, sir, when you marked my script on the dude, you said no workings. Oh, when I said no workings, that means I wanted to see your workings. All right. So I wanted to see your workings. If I said no workings, maybe you put your workings inside the journal. All right. In the journal, in the cash receipt journal, we don't want to see the workings, but on the outside of that, just below the table, I would have wanted to see your workings, because then I would have probably given you marks. If I saw, okay, there's marks. So for instance here, let's just look at this debtors allowance journal. Seeing this 20,000 times 15 over 115, I would have wanted to see that, and then the answer. So for instance, if you do this and you have the wrong answer, then at least I can see, but she has the right process. So this is just a finger error. So can you see I can give you some marks over here? But if you don't show me working and then your answer in here is also wrong, then there's nothing I can give you. So I think that may have been the logic as to why I was saying that. Okay, TK, are you good? Are you answered? Just give me a thumbs up if you are. All right, so here under narration, I'm just going to continue in the meantime. You're going to say drawings of trading inventory. That's all. Okay, and you didn't need to use these exact words, just something to that effect, so we know you know what's going on in this transaction. Okay, so then what else did you need to do? Over here, you then needed to say, okay, here we want the VAT inclusive. Remember they said the selling price. I'm just going to put it here so that you don't have to scroll all the way up. Was 8,000 R, 8,000, and this was inclusive of that. Okay, of that. Okay, so we know drawings is the cost price excluding that. So here we know that the markup is 50%. Sorry, not 50%, 30%. All right, on selling price. Okay, so then let me just scroll up there so you can see it again. Here's our model: 100% selling price, 30% profit, and then cost. We want cost. Okay, So again, we're going to take this, I'm just going to do the calculation here in brackets since we have the space. So we're going to say 8,000, which is the amount inclusive of that, because we want the cost inclusive of that, times what we want. We want cost, which is 70, divided by selling price, which is 100, which is what we have. What we want divided by what we have times what we have, random amount. And then what should we get here? We'll calculate that just now together, and we know we're going to debit that amount. So let's quickly see. So 0.7 times 8,000. Okay, 5.6. Okay, so we have that 5,600. Trading inventory we know is the cost exclusive of that. So here, you put the calculation in 100. What we want is the VAT exclusive amount. What we have is the VAT inclusive. Sorry, times the 5,700, 600. Sorry. And what amount do we get there? Let's see, times 100 divided by 115. So that should be 57. Okay. Right, and then obviously the VAT amount is the difference between the two. I'll plug that in now. I don't know if there's something that someone said something off the chat. I'll check now. Just want to finish this off. Okay, so that's the VAT amount that we have there as output VAT. To reverse the input VAT. And then you're done. Let's just quickly check. Okay, all right, awesome, TK. Thank you very much. Cool, so then you're done with the journals. Okay, done with the journals. And then the last bit was to do again the general ledger reconciliation statement. That was your last question. Okay, we did 5.6, but now we just want to do this so you guys could see, okay, this is what they wanted us to do here. Okay, so I've just included, okay, yeah, this is exactly how it was in your test, according to what I can recall. So let's see. What did they ask you guys there in question 3? Cool. Where's this question? Now, here we are. All right. So they let you know that it, the business is a bad vendor. Standard rate of 15% applies. They gave you the the trial balance that had errors in it, and then they gave you 5 transactions. First transaction, they said the owner made a capital contribution in the form of a personal check for 5,000 drawn in favor of the business, but this transaction has not yet been recorded. Okay, so whenever there's a capital contribution, we know this is going to affect bank. All right, it's going to increase our bank. So bank, when bank increases, what do? Do we debit or credit? All right, we know we have to debit because it's an asset. So we're just going to put 5,000 there. No plus, no minus. By virtue of debiting or crediting, we know exactly what's supposed to happen. Then we know, okay, capital is also affected. That's going to increase. Can you see the double entry here? We credit the capital account whenever it increases. Can you see here we credited, here we debited. Okay, right, done. We're done with the first error or adjustment that needs to take place. Then we go to the second bit that they gave us. They said, when balancing the bank account in the general ledger, okay, the credit side of the bank account was undercast by 200 Rand. Okay, and this mistake was carried forward when the account was balanced. Undercast, remember we said, it means that it was short by. Okay, the credit side was short by 200 Rand. So then what that should tell us is that we then need to credit the credit side of the bank account by 200 since it was undercast, it was short. Okay, so then here we need to put 200. Okay, that's all that needs to happen over there. Okay, then we are done with that bit over there. Then we move to the next one, the third piece of information they gave. They said the creditors column, okay, in the cash payments journal was not posted to the general ledger. All right. So if the creditors column, all right, was not posted to the general ledger, we know that that total for the creditors column is going to obviously affect the creditors control. Okay. Right. So we go to the creditors control and we say, okay, the cash payments journal, what is the function of the cash payments journal? Is to pay people or businesses. So therefore, it's money leaving us. So if money is leaving us and going to the creditors, that means we owe the creditors less. So are we going to debit or credit the creditors control? Guys, and I want someone to answer for me there in the chat. Are we going to debit or credit the creditors control? Come, guys. We're almost done. Just two more transactions. Are we going to debit or credit the creditors control? If we're posting an amount from the cash payments journal, is the creditors control going to increase or decrease as a result of us paying them? Thank you, TK. We're going to debit because that's going to decrease our creditors control. So here we're plugging in 2,400. Okay, and that's all you needed to do there. Okay, right. Then fourth one, second last one. They said a vehicle was bought on credit during the year for 5,250, excluding that. Okay, so that 500, 250 was excluding that. Okay. The following double entry was made in the books. Um, was made in the books to record the transaction. Okay, so let's see. Let me quickly just show you the double entry that they're talking about so that we're all on the same page. So we debited vehicles. Okay, and that was for 4,560. Okay, and then here they're saying we credited. Okay, yes, need that. Okay, and we debited input at that was for 685. And over here, we credited what? What were we crediting? Okay, here we were crediting bank, and that was for 5,250. So let me read the question again. It says a vehicle was bought on credit during the year for 5,250, excluding that. The following double entry was made in the books to record the transaction. For vehicles, 4,565. Then input VAT, there you have it. And then obviously bank. Okay, so then what must happen? Remember, this was bought on credit. So your bank account, we have to remove this. Go to bank, and since it was, can you see it was credited here? So when we go to bank, we're going to have to debit to remove that credit. It's 5,250. Picked out with that. Then we say to ourselves, okay, what we need to do now is to rectify the error in the creditors control, because remember this thing was bought on credit. Okay, and that's going to increase our creditors control. So here we're going to actually credit by 5 to 50. Okay, and that was all that you needed to do there. That was all that you needed to do there. Then finally, last thing that you needed to do was the stationary column in the petty cash was undercast by 110. Okay, so again, it's much like the other one that we did. Stationary column was undercast. So that means it was less than, this amount is less than what it should be, okay, by 110 Rand. So in order to increase that, are we debiting or are we crediting? Okay, again, the stationary account is an expense account. So we have to debit by 11. Okay. Then when that's done, okay, because that's all the errors that needed to be corrected, you then are saying, okay, the new balance for stationary, you're going to add this debit balance to that debit entry. You're going to have a debit balance of 1,500 and it should be 40. Yes, and that's all you need to do. Okay, then here there's nothing. So here you're just going to have a credit. There's no adjustment, so you're going to have a credit balance of 173. Okay, I don't think I need to do each of these. Okay, but you get the point. Okay, that's how you then deal with those adjustments, and that's all you guys needed to do. That was quite a significant amount of marks. If I recall correctly, that was at least 20 marks thereabout. Okay, but anyway, I hope now we're comfortable with our general ledger reconciliation statement. Guys, I have gone through all your past papers that I've uploaded. So that's 2015 to 2018. I've recorded those and I've posted all of them on your YouTube channel. And I'm going to post this as well onto the YouTube channel. Okay, so that should leave you in a good stead in your revision. Okay, please do go through those videos because there are some errors that I made on the suggested answers, but I've picked them up and made mention of them in the recording. So please do take a moment, plan that in your revision and take a moment to actually run through those. And then, yeah. So guys, you've done well up until this point. I have no doubt that you'll do well in the exam as well. And I don't know if there are any questions or thoughts on the module altogether. Anything you want to ask me, because this is the last time that we are touching base. It's now about you and the exam paper, really, on the 7th of July, if I'm not mistaken. Any questions or thoughts? Anything you'd like to mention to me? Okay, okay. If not, then that's perfect.